guys, welcome to another edition of Market Marauders, beating the market one trade at a time. If you're new to Market Marauders, it's an investment channel, helps you to find the best deals in the market. So if that's something you're interested in, make sure you smash the subscribe button down below, like, comment, and share. Also, I have a Patreon page, which is a community of investors. Day-to-day different picks that go on in the market, just talking about those. So if that's something you're interested in, click that link down below. Now I'm going to dive into my top 3 option picks for the week. So let's do it. So starting off with number 1, I have ticker sign YELP for Yelp Incorporated. The moving average 50 is $21.51. Moving average 200 is $31.12. And they ended the week at $23.45. So above their moving average 50, but not above moving average 200. So I believe to make an informed decision about picking a stock, you need to look at some more background information on what the company does and how they operate. So I'm going to be doing that and jumping into a press release from Yelp. Now, Yelp is kind of one that's, overlooked in my opinion, but I think they're going to be very crucial as far as, getting the economy back started. Restaurant industry was one of the industries that was hit basically the hardest, next to cruise lines, in my opinion. Um, and I think, Yelp is going to be very beneficial, and I could see more people using it to try to find, the local businesses that are still open. Now, a lot of local businesses were impacted by being closed down because of the whole Roni situation. But, with a company like Yelp, a lot of those companies and small businesses are still have reviews that are on here. So, it can help with, trying to get the information out to people on new hours, new procedures that the company may be doing, new numbers. Some of those companies may be closed. Some of them may still be open. But it still has the reviews on there. I know a lot of companies or a lot of restaurants put their actual menus on Yelp. So if you went to a restaurant, you know, before the whole quarantine situation happened, and you liked their food, and you liked going there, they may have, an altered menu for to-go items that I can see, Yelp helping with. With that being said, I think, moving forward, they're going to be pretty a booming company as far as trying to get those reviews out. For those local small restaurants and some bigger restaurants as well. This is one of the press releases that came out. This came out 28th of April. Basically says the company that connects people with great local business today released first quarter uh, data for the Yelp Economic Average, or YEA report, benchmark of local economic strength in the U.S. given the unprecedented changes brought by brought by the Roni situation. So it says the report has been adapted and revealed dramatic shifts we're currently seeing in the local economies. So it's going down to some more. YA found businesses closures rates rose by 200% or more metros. Or more in metros and states across the U.S. Consumer interest in local business fell by 50%. So there's some pretty important data research that they have out there on that situation. It says the report also observed that some businesses saw surges in interest, including fitness, exercise equipment, up 437% in seasonal adjusted share uh, of relevant page views, reviews, photos since March 10th. Community supported art culture up 407% and guns and ammo up 119%. So they really have, good market data as to how people are spending their money. So that's also another good thing for the company they can share. And also helps you, to see firsthand what the economy is doing or what they're leaning towards. So it's not just a review company, but they also have a lot of good, data for uh, that you can interpret when trying to look at the overall big picture of how the U.S. is impacted by the whole Roni situation. With that being said, I think a call would probably be the best option in my opinion. I definitely see them being used a lot more in the future, especially as businesses open back up and the data that they're given with their market research. So the expiration date, June 26th. Um, I also had someone ask me, on the comment section, how do I find my expiration dates? But I usually try to choose my expiration dates that are at least a month out. So a month to see what I'm basically reading occur. But, since that article was in April, I'm definitely going to bear in mind that that's not a recent article that came out today. But with that being said, a month from when I'm looking at the stock, I usually try to go out a month from that or a little more. A month is kind of like my cutoff for the least amount of time, and then a month plus I'll probably look out from there. So that's how I choose them. But different ways for different people when trading options. Now this is the Robinhood platform. If you guys are interested in signing up for Robinhood, I got a link down below that you all can check out. Uh, so you'll sign up. You can sign up using that link and start trading options. And this will be the platform that you would use. So I think a strike price between $28 to $26 is probably a good range, with the expiration date of 26th of June. Probably be a good option. Um, and you'll be looking to pay between $79 and $98, which is not too bad. It's not too expensive as far as options are concerned, because there are some that are extremely expensive out there. But between 79 and 80 and 79 and 80 $98, I think is a pretty reasonable range for an option. Now, if you're new to options, I usually or only buy calls or buy puts. I don't sell calls or sell puts, but small explanation of buying calls and buying puts. If you buy a call, that means you believe the stock's going to go up to a certain price. If you buy a put, that means you believe it's going to go down and below a certain price, which will be your strike price. So by me saying that I'm buying a call as a retail trader, I'm going to say that I believe the stock is going to go above $26 to above $28 by June 26th. It's basically in a word statement form of what you're doing. Now, these options right here are all considered to be out of the money options because they have not gotten to that strike price. Now, that share price. So the share price right here, where it ended on Friday, and bear in mind this is the weekend, so these are all stagnant prices. These prices will change when the market opens on Monday. But based on the stagnant price, which is where the market closed on Friday, this is the price that this is based off of. But the share price itself hasn't gotten above $26 or $28. So these options essentially are out of the money. If you go down below, which I can show you, these options are all in the money, which basically means that it has gotten above that price. So $23 is someone bought a $23 option at a strike price, or option at the $23 strike price, and the stock ended at $23.45, then they're basically considered in the money. So that's why this stock price is $232, whereas these other prices like these are a lot cheaper at $98 and $79. So just bear in mind, you could trade however way you want to trade, but just bear in mind when you're looking at in the money options, they're going to be a lot more expensive than out of the money options. So just bear that in mind if you're new to options. And also, you're basically looking at volatility. When doing options trading, volatility is basically, how fast up or how fast down the stock is going to be moving by the price. So you always want to look at volatility and look at your time deviation as well. So, as time goes on, how volatile do you think this stock is going to be? Do you think the stock is going to go up really fast. You think it's going to go down really low, because basically, if it's not going to do either or and just run sideways, then you're not really going to make any money on that option. So you want to see it. You want it to go in a direction towards your option, and that's the whole key. That's how you gain money, and you know. I feel like a lot of new investors kind of lose sight of that. So, you know, when buying options, you want to see the stock go to where you are trying to get the price to go. So just bear that in mind when looking at options. Now going to my number two, we got ticker sign TWTR for Twitter Incorporated. Moving average 50 is 27.96. Moving average 200 is 34.15. They ended the week at 29.93. So they're in between the moving average 50 and their moving average 200. So yeah, like right in between both of those metrics. Go to some background information. This came out April the 30th. This is their quarter one 2020 letter to shareholders. I'm not going to read this whole thing. It's on their website. Just Google press releases. And Twitter, and you'll come up with their investors relations. You might want to type it investor relations Twitter. Probably easier way to find it, because typing in press release Twitter, I came up with a weird website. But investor relations Twitter press releases. If you Google that, you'll definitely come up with the right page. So we can see on here the average MDAU reached 166 million in quarter one, up 20%, 24% year over year. And the MDAU is basically monetizable daily active usage. So that metric has gone up quite a bit. We see on here it's gone up significantly from most of their quarters. Now, I don't know if that's because of the roadie situation, a lot of people are at home, or if that's just organic growth. Either one, I think it's a pretty good metric to have continuously grow, because that's more ads that they can put on their site and be profitable. So going into another highlight on here, revenue was 808 million in quarter one, up 3% year over year, reflecting a strong start on the quarter that was impacted by widespread economic, get it right, distribution related to COVID, the Roni in March. Reduced expenses partially offset the revenue shortfall, resulting in operation loss of 7 million. So the next one, in light of the current operating and economic environment, we've shifted resources and prioritized to increase focus on our revenue product, particularly performance ads being with MAP, with the goal of accelerating our long-term roadmap. We have reduced our company hiring and non-labor expense plans to lower our expense growth while continuing to focus our investments on engineering, product, and trust and safety, ensuring our resources are allocated against our most important work. So basically, they have a path forward to help them grow as a company. But their metrics show that they have grown. So their year over year increased quite a bit, which is always a good metric to see. Um, So, even though their GAAP, was down compared to year over year, their other metrics definitely were up. Like their total revenue was up, and their MDAU was up. So I think that's a good metric overall. I don't think that their negative GAAP will definitely affect as much as uh, the other ones would. So that being said, I think a call is probably the best option. Maybe looking at a call between $31 and $33. So you'd be looking to spend between $166 and $116. So, not too outrageous as far as spending is concerned, but they are a lot more expensive than the Yelp calls. Now, looking at expiration date around June 26th, so about a month, a little over a month, um, as far as expiration date is concerned, and I think that's doable for Twitter. As people are going back to work, I think they're going to continue using the platform, and I definitely see it continuing its growth streak. Because I don't think people are going to use it just in quarantine and be like, "Oh, I'm not going to use it anymore." I think they used it in quarantine. And they're going to continue to use it as they're integrated more back into the workforce, and daily work begins back to normal. Now going to our number three, we got ticker sign CSCO for Cisco Systems Incorporated. Moving average 50 is $39.80. Moving average 200 is $45.20. Did it the week at $42.99. So right in between the moving average 50 and moving average 200. So going to Cisco, this is just going to say they have a couple of meetings coming up, telemeetings coming up. There's a lot of things going on with the company. And I think the earnings is coming up as well too. But I think Cisco definitely makes products that have been used in quarantine. A lot of different network type stuff. Companies changing the way they're doing their procedures. IT is definitely a big market right now, and I know a lot of companies are needing IT help to try to help integrate, their working remotely things, and a lot of companies I feel like are going to continue with the working remote uh, applications that they've already had. So they're not going to be like working remotely now, but then like everybody's coming back to work. I think it's going to be working remotely as well as maybe a half and half. You never know, but I think Cisco definitely can help mitigate some of those problems or alleviate some of those things that companies may be facing in a time like this because they make the products that they use. So that being said, I think a call will be a pretty good option, uh, and it's going to be between $45 and $50. Um, so I have you're going to be looking to pay between $24 and $122. So not too expensive. On the high end, you have for the high end $50 strike price, $24 by the end by June. I don't think that's too bad. $24. You know, that's not that much as far as options are concerned, in my opinion. And you're basically saying it's going to go up $7. So $7 difference in a month. Um, from a company like this, I think is very doable. And you know, I think this one to me is a very interesting one because I don't know volume wise how fast they move, but they definitely seem to be on a pretty good uptrend. So if you look at like the month gaps, you have what March 16th uh, to April 16th. It's gone up, pretty much dramatically. If you had an option, down here, um, and then you could have executed the call up here, you definitely would have made your money. So I definitely think, it has the capabilities to do that again. Um, yeah, I think it has the capability to do that again, especially with all the things that they do. Um, and all the procedures and stuff they have, the products they make, I definitely think they have the capabilities to get up to that price. Now, thank you all for staying to the video. I got a bonus number 4 option for the week, which I do every week. So let's jump into it. So it's going to be ticker sign NVAX for Novavax Incorporated. Moving average 50 is $15.07. Moving average 200 is $7.80. They ended the week at $18.73. Going into some background information on the company, this article came out April 8th. So they basically are trying to make a vaccine uh, for the whole roadie situation. This article just basically explains, some of the stuff they do, what phases they're in. It says the first human trial is phase 1, trial accelerated by May, with preliminary results in July. So, kind of started this month, and then in July expect to hear more news from them, which I definitely think is going to make the stock go up. So in July, I definitely expect the company to shoot up even more based on that news. So this is just some information on the company. They're going to be having a conference call. You guys who are new to investing, this conference call is just for everybody. So, whether you're invested or want to begin investing, conference calls are always a good thing to listen to. They always play like a lot of good information some information that they don't even release. So, they'll have investors call in and ask a lot of different questions. But the questions that the investors ask aren't published on the PDFs that the company releases. It may just be, the company, what the company was planning on saying released. But some of the background stuff. That investors ask during the Q&A session, maybe questions that you have, things that you're interested in. So it's always good to listen to these. I know the ones that I've listened to in the past, they just asked me to put down my name, email address, what company I work for, and then I was able to get into that lobby. I haven't actually called into any of these, but you'll just call this number and then you'll type in the passcode. On the webcast one, there was no passcode. You just enter directly into the lobby after you fill out that small questionnaire. But I encourage you, if you're interested in the stock and you're interested in the company and what they do, and you want just some background information on it, call in or watch the webcast. It's definitely some good information on those. Now, with that being said, I think a call is probably the best option as far as going with the company. I said June, but realistically, I think like July is when they're going to be giving the updates. So I'm going to switch this to July. Um, because that's when they said they're going to be having their updates after the phase one trial. Now, a realistic value to me, I think between $25 and $29 is a good strike price. So you're moving that into you'll be looking to pay from $318 to $350. So these are a little bit on the pricier side, but the volatility of this company, in my opinion, is definitely higher. So I definitely think you'll see these reach their levels faster than you'll see any of the other ones. Just for the fact that this company is doing something in the field of the whole Roni situation. So once news drops of an update, then you're basically going to see the stock shoot up, which is going to increase the volatility of the stock, which means your options are going to be worth a lot more. So I think. Moving forward, since they have a plan for July, it'll probably be smarter to have a call option for July, since that's when people are going to be expecting to hear news for the company. Now, they have only one option that I saw on that list for July, and it was July 17th. And the other one's for October. I don't think October, was a pretty good one to have. I think July would be a pretty good one to hold on to because it'll be right around the time when that volatility comes out. They didn't say what date it was; they just said around July. But I imagine by the middle of July, they would already have that information out. And you gotta think, July 4th is in July, so I think they would have that information out before Independence Day, and everyone's on vacation and stuff like that, or right afterwards. So the week after. Um, Probably have that information. So, July 17th I think is a pretty good time uh, to have that expiration date. And I think these are pretty good prices to have as your strike prices. All right, that's been another episode. Drop a comment down below. Hit that subscribe button. Join the Patreon group if you haven't joined already. Smash that like button. Tell me what stocks you guys are looking at for the week. Good luck trading out there. See you guys next time. Peace.